Hi, welcome to Numerix Video Blog. I'm your host, Jim Jockle. Joining me today, Kevin McPartland of Greenwich Associates, Head of Market Structure Research. Kevin, how you doing?
Good, how are you? Thanks for having me.
And thank you for joining us at our next Global User Conference. Today you presented on your vision based on your latest research in terms of the transformation of the trading business, where you kind of walked our users through the vision of 10 key priorities, ranging from changes in business model through some technology considerations to think about. Perhaps what are some of your highlights of this latest research?
Sure, so you said it well. There's a good number of things that are about the business model and changing the business model to fit the current environment, and then also a number of sort of technology-focused points that banks should think about. So on the business process side, I think one of the key things is thinking about the profitability of clients as opposed to simply looking at clients who generate a lot of revenue. Big clients are good and you need those on your roster, but increasingly as banks are, again, less focused on that, sort of just looking at their share of the wallet, their investors and the board members, especially at the banks, are looking now at how profitable are these businesses, and they need to be profitable for the banks that want to stay in those businesses. So that's a big focus, and something that is a big sort of mind shift, I think, for a lot of trading desks is not just going for big clients, but going for profitable clients.
So, but on the other side of the coin, you also said, don't be afraid of the cloud. Where do you see the cloud now? Are we moving beyond the hype cycle and we're looking at practical implementation?
Yeah, I think we are. Finally, we're past not only the hype cycle, but we're past the period of unnecessary worry and concern. Worried about, will it be compliant? Will it be safe? Is the security up to par? I think, especially that we've seen U.S. regulators look to the cloud in several circumstances, that the banks are starting to feel more comfortable. Not just the banks, but the market participants in general starting to feel more comfortable.
And regulators are starting to use the cloud themselves.
100%. Yeah, FINRA in the U.S. is a big user of the cloud for sure. So the banks are starting to wrap their heads around that, and realize that, hey, actually, if I look to an Amazon, or Google, or Microsoft, that's all they do for a living. They're good at it, and the security of that information in those cloud environments are what keep those businesses afloat, so we can trust them with our information.
So, in terms of recent news on trading platforms and things of that nature, what is the competitive differentiator for an institution looking ahead to 2020?
Yeah, so it's an interesting point. We talk a lot about in the research that institutions should look to outsource where they can and use third-party services to become more efficient. Might lead you to believe that technology is not a differentiator, but of course it will be. On the institutional side, we talk about electronic trading and data, analysis and intelligence, all the way down to the retail side, where we're talking more again about robo-advisors and payment services and such. But again, across all of that, I think there's a relationship component and a human element that will never change, regardless of how electronic and automated these businesses come. People want to talk to somebody, they want to make sure they trust who they're doing business with. So merging that with the technology will be key. And
so one other question, it's come up a couple times in this conference, is the concepts of AI and other new leaps of technology. I mean, arguably, in terms of trading, we've seen AI kind of kicked around and maybe in its early stages, but there's also some arguments that AI can have a profound impact on elements of risk and risk management platforms. Where do you see AI, as we move beyond cloud and the hype cycle, where's the AI adoption?
When people think artificial intelligence, they think of a robot sitting in a chair with robot fingers touching the keyboard, and that's not what we're talking about. It's software that can learn from what it's done in the past. So if a risk model has seen something happen, not just big macro events like the credit crisis, but small tiny blips or changes that maybe it wasn't expecting, and to then rework that into what it will do into the future to adjust the model itself without much human intervention. I think that's where we're going to start to see machine learning really start to creep its way into financial services.
Well, Kevin, I encourage everybody to read the report. You can get it at Numerix.com or on Greenwich Associates' website as well, which is
Greenwich.com.
And if I want to follow you in your latest research, tell me where you're blogging, what's your Twitter, where can I find you?
On Twitter at KMcPartland, and then you can go to blog.greenwich.com, and we're always posting there as well.
Well, Kevin, thanks so much for joining us. And of course, we want to talk about all the topics you want to talk about. Please follow us on Twitter at NX Analytics or on Numerix.com. Thank you so much.